Hello, everyone. This is Sergio Marrero here with RBL1 Live. We have a special guest today who is outgoing managing partner of the Dorm Room Fund, Justine Humenansky. She is a graduate of MBA program, the Haas MBA program at Berkeley, and has a varied experience before breaking into venture, working not only as a professional ballerina, but then working at Barclays, Samsung Next, First Round Capital, the World Economic Forum. And excited for you to share your journey with the audience today. So thank you, Justine.
Yeah, I'm very excited to be here. Thanks.
Absolutely. So we're gonna dive right in. As I mentioned, Justine works at the Dorm Room Fund, and they are a fund that invests $20,000 checks into pre-seed companies that are student or graduate student led. But I will turn it over to you. Can you share with the audience a little bit more about the Dorm Room Fund?
Yeah, sure. So Dorm Room Fund is a student-run venture fund that invests in student founders, and we are backed by First Round Capital. So they are currently our sole LP. And the fund was started, I want to say, about 6 years ago, really with I think at the time it was harder to get funding if you were a student founder. And the team that started Dorm Room Fund thought that actually that was somewhat ironic because there are benefits to being a student founder, being that you're surrounded by peers that will give you feedback, that will like beta test your product, etc. You have access to professors, and you have a .edu email address, which people tend to be a lot more receptive to. So they wanted to create a way that would promote student entrepreneurship and fund student founders, whereas at the time, I think it's less so now, but at the time, a lot of venture funds would tell student founders that in order to get funded, they'd have to drop out of school. So Dorm Room Fund wanted to create an alternative to that model.
Great. And do you in funding student founders, what are some of the things you're looking for? Do you fund freshmen and sophomores, or only juniors and seniors when they're coming out the door? What are some of those characteristics?
Yeah, so we fund anything from through undergraduate through PhD, and student founders across the nation, just located in the US. We have 4 teams where we have student investment partners geographically. So it's San Francisco, Boston, New York, and Philadelphia, but we'll invest in founders anywhere in the US.
And how much are you all investing? I know it's $20,000 checks, but what's the
Yeah.
how many startups are you investing in a year?
So I don't think the fund size, et cetera, is public information, but I think over the course of the fund's life, we've invested in, I think, over 700 startups.
That's amazing. That's quite a track record. I know for those that know a little bit more about the I would say student scout scene and different networks. There are a few. So you have Dorm Room Fund, Rough Draft Ventures, Contrary Capital. Can you share a little bit more insight into what you believe is unique about the Dorm Room Fund?
Yeah, for sure. So since Dorm Room Fund started, like the number of funds that are funding student founders has definitely proliferated. And I would say for a large part, we all kind of work together because these students are raising funds in which we can all or rounds in which we can all participate. So what is different about the Dorm Room Fund model for the partners or the scouts that are involved is some of the other models, you're more of a scout, like the representatives are more of scouts, and then someone from whoever the affiliated fund is makes the actual investment decision. Whereas at Dorm Room Fund, investment partners have totally autonomous decision making, so we don't need it to get it signed off by anybody at first round. There's not a first round partner present in the pitch meetings or anything like that. And then I think in terms of like other value propositions, the funds vary in like what the check size is. Some of them are larger, some of them are smaller. And then obviously you're getting connected to different networks. Funds like Contrary are more of a distributed model. So they have investment partners, I think, in a greater number of regions, which is interesting. I think what is unique about Dorm Room Fund is that obviously you're gaining access to the dorm room fund and to some extent first round resources and networks, but also a lot of times founders will want to work with dorm room fund because their kind of go to market or initial market that they're targeting involves students or universities. And so we have representatives at, I think it's 40 universities nationwide. And so that just gives them access to that go to market strategy much easier. And then I think also what's different about like a student run fund versus a traditional VC is that you'll get a dedicated point partner who's probably not sitting on a bunch of other boards and might have more time to actually work maybe more side by side with the founding teams.
That's great. Can you share a little bit? I'm continuously impressed with what some of the what Dorm Room Fund has done, and some of the other venture funds that are affiliated with these startups. So hold on one second. Can you share more about the female founders track and the blueprint investor track that is part of the Dorm Room Fund?
Yeah, for sure. So the cool thing about Dorm Room Fund is we're a startup too. So the investment partners have a lot of autonomy to launch programs that they want to run or to address different areas where we think we could improve as a startup ourselves. And so Female Founders Track was launched 3 years ago by a partner named Shohini Gupta. And that's basically an 8-week program for female and non-binary founders to kind of, there's like structured content each week, generally with the former operators and VCs, and they just kind of go through the basics, fundamentals, get paired with a mentor. And I think really what the participants have said is like the community aspect is so helpful because I think a lot of times the participants are solo founders too. So it's helpful to be surrounded by kind of a peer group that's experiencing the same challenges and frustrations that you are. And then the second thing is just confidence. So I think we've seen a lot of founders that are totally capable and know what to do. They just kind of need a confidence boost to kind of go for it. And so that's what I think that program is really great for. And then the Blueprint project is in its second year. The first year it was a founder track, and this year it's an investor track, and that's for Black, Indigenous, and Latinx investors. And that's a program that's run over the summer that's like basically just to help people break into VC because it's a very kind of opaque and closed network and closed information exchange industry. And so it's really just to like break down the jargon, kind of outline what the path to getting a job in VC is. And then again, like create a network and community and access to mentors and prominent investors in the space for participants.
That's great, and I love what you're doing with the female founders track and with both of them, the blueprint investor track. To your first point about helping solo founders, I feel like a lot of investors say we need to have a team, right? And that's seen as a positive, but at the same time, there may be this pressure to just put together a team and find people around you when they might not be the right people, right? And I think that's a delicate balance to as you're moving forward to building out your team and launching ventures.
Yeah. I should specify they're not all solo founders, but I think even if you're 2 or 3 people, it can still feel very lonely, and you kind of feel like you don't know what you're doing and you don't know the direction. And a lot of the teams are in a similar stage, so they're actually facing similar challenges, albeit in different industries. And so I think that gives a feeling of being less alone in the founder journey.
Absolutely. I would love if we can shift a little bit into your story of how I know you started as a professional dancer and moved your way into venture, and would love for you to share a little bit of color with the audience on how you did that and why you did that.
Yeah, sure. So I joke that I'm like a professional pivoter, basically. So I did high school in 3 years, and then I danced professionally for 6 years, and then went to undergrad afterwards at that point. So, and then basically a friend suggested I try an internship in finance. I went to undergrad in New York. So there was a lot of finance opportunities, and what felt similar about that to me, ironically enough, with dancing was like the environment was kind of similar in that it was performance based and that you had to have like this very hard work ethic, and there was an exacting standard and it was rigorous. So environmentally that felt similar to me. And then I just thought I particularly was interested in markets because I thought it was fascinating that you kind of had to understand very broadly what was happening in the world. But what was more interesting about that was that you had to understand how it was all connected. And so I liked equity research in particular, and that's because in my background that looks like it doesn't have like a common thread. The common thread that I see is like everything has been related in some way to creativity. So dancing, that's obvious. Equity research, your product is basically your ideas and that you think differently. And then in venture, it's all about like going from an idea to like the reality. But initially, I thought I would work in equity research for 3 or 4 years. I got the CFA, which is basically a 3-year advanced finance degree. And then the original plan was that I would go work at a hedge fund. And I should specify that when I did equity research, I was covering the TNC sector. So I knew I loved being on the kind of being in an investor seat, and I knew I loved being involved with tech. But I realized I didn't think like a hedge fund, meaning that I thought companies were more interesting than stocks. And I was like really fascinated with what was going to happen 3 years from now and how that was going to reshape the industry. I was much less interested in like what a company's EPS was going to be next quarter. And so that was the point when I said, well, I think maybe I wasn't originally going to get an MBA. And then I thought, well, maybe I could use the MBA as a way to get to the West Coast, be more of like an active participant in the tech industry as opposed to like kind of an observer, which I felt like I was, and then like get very ingrained in the venture and startup world. And so that's basically what led me to Berkeley to do the MBA. And then I spent those 2 years spending all my time on like 2 things. And one was I did a lot of blockchain research with different organizations. And then the second was just working with a bunch of different early stage founders and funds. One of those being Dormer Fund.
And what was the impetus behind the movement to go from, you were in New York, right?
Yeah.
And then go out to Berkeley on the West Coast?
Yeah, so I think 2 things. One, I studied finance in New York, and I thought that I benefited from the proximity to being in, let's call it like the financial capital of the US. And I thought the same thing would be true for venture and startups in the Bay Area. And then the second thing is I've actually lived in 8 or 9 different cities or regions. And although it's very disruptive to do that, I feel like I gained so much every time I moved to a new place and kind of like had to start from scratch and embrace a new way of doing things and meet new kinds of people. And so I wanted to use the MBA to do that again.
Absolutely. What led you, and I know before or really during your time at the Dorm Room Fund, and working at First Round Capital, you worked with the World Economic Forum. Can you share more about why you did that and how that influenced your focus in venture?
Yeah, for sure. So I did, this is like definitely on the aggressive side. I did 6 internships during the 2-year MBA experience. And like, basically what I was doing was like running small experiments to test things out kind of in the way that you would with a early stage startup. And so I wanted to work with a bunch of different kind of organizations that were focused on tech, but in very different ways. So I did growth strategy in like a data center infrastructure company that I used to cover when I was at Barclays. I worked with Samsung Next and First Round and a fund called B Partners on the venture side. I went through the crypto startup school with Andreessen Horowitz, and then I worked at the World Economic Forum. So I got a taste of corporate venture, financial venture, also at different size funds, growth strategy, being like a founding team going through an accelerator. And then this World Economic Forum was really fascinating to see like how do you create tools for policymakers? How do you bridge public and private sectors to try to deal with an emerging technology. Mostly what I focused on for them was like central bank digital currencies and financial inclusion work. And so that was just really fascinating to see how you try to create discussion or frameworks or toolkits for very large influential organizations to adopt new technologies.
No, that's great. It seems like you have a history of just diving deep and not hesitating, right, to get into new spaces. So
yeah, I think I really like steep learning curves. Like not when I'm in the middle of one, but I like the constant feeling of well, I don't know that I like it, but I've constantly recreate the feeling of not knowing or not feeling like I know much about something, and then it's very satisfying to feel bit by bit that you become an expert at something.
Speaking of becoming an expert, what I wanted to share is I wanted to ask about your research. Right, you wrote did some research on the state of student startups specifically, and while you're at the dorm room fund and posted in relation to there, showing the article in the background. Can you share a little bit more on your research and what you found?
Yeah, definitely. So I'm like a very curious person. So I realized we had all this data basically because we have an open application on our website. So anyone can apply for funding from Dorm Room Fund on a rolling basis. So I realized we had like a really interesting data set that told us exactly what students care about basically, because whatever problems they're trying to solve are the problems they encounter and the things that they care about. So I decided to do analysis of it's like 700 or 750 applications we received in 2019, and looked at various different things like what regions is student entrepreneurship happening in, what's the composition of the founding teams look like, what markets are they targeting. I was very interested in like thematic elements. So what problems were they trying to solve? So some of the things that I thought were interesting were only 13% of our applications came from the Bay Area. So I think we have a lot of opportunity, and I think with COVID, this will be especially relevant to kind of expand our sourcing and deepen relationships that are outside the 4 regions where we have physical partners present, which is, like I said, San Francisco, Philly, Boston, and New York. So that was one thing I thought was interesting. The other thing I thought was interesting was only 13% of teams were building products for students or that were like education related. That's like thing I think people think, oh, students probably build for other students, but it's much broader than that. And then in terms of themes, the 4 that were very prominent and recurring were inclusion, so opening up access, whether it's financial inclusion or telemedicine or access to technology more generally. Communities, I think Gen Z and millennials to some extent kind of want to have a different relationship online or with the internet where there's more of a sense of belonging and there's more like smaller groups as opposed to like a network of 1 billion plus people, and it's more authentic and it's positive and sometimes it's anonymous. So that was a big thing that we saw. Health and wellness was a huge thing, and that's kind of tied into that as well. And then the final thing was, well, I'm blanking on the final thing right now, but those were the big themes that we saw. The number 1 category that companies was healthcare, which also included health and wellness. So again, that was a huge thing that we saw.
Well, thanks for sharing a little bit of that. And for those interested in the research, the link is in the live stream notes, so you can check out Justine's research there as well. And I can't help to right now in the time of COVID, right? Many of the experiences are limiting the in-person interaction, the ability for scouts to be on campus and go to different events and find entrepreneurs and really bring them to you all. How do you, since you've done some of this research, anticipate the global pandemic having an impact on entrepreneurship for student founders?
Yeah, I mean, these are like active conversations that are going on at Dorm Room Fund, and I would imagine many other funds right now, they're trying to figure out how to source in this new environment. I think it will be challenging. I think you'll see more things like virtual office hours and virtual demo days. And every school is going to be different. So some of them might have small group interactions, but I think it presents a really interesting opportunity for us to reach, again, like I said, more founders and create relationships with schools outside of our core region. So I think it was something like 60 or 65% of our applications came from regions in which we don't have a physical presence. And then 25%, like 1 in 4 of the investments we did came from regions where we don't have a physical presence. And so since COVID kind of dispels any real sense of location, I think that gives us an opportunity to do a better job supporting founders in those regions.
And besides the distribution, I mean, do you I guess it's really having faith that some of these students will just figure out, right, how to connect. What I think about is the innovation that's now taking that there's two factors, right? A lot of innovation takes place from bringing those students together and them engaging and interacting with each other, which is happening less. Another one is the discovery aspect of how do you find, they're not tinkering in a dorm room with a number of residents, they're each in their own respective locations. It's where is the virtual dorm room, is the question. Any ideas around, or are there any interesting things you're seeing or you anticipate will come to play in elevating those founders?
Yeah, I mean, I definitely think that you're starting to see things like, for lack of a better term, like matching programs or like things that you can apply to that will pair you in like breakout rooms or small groups of people that you can kind of ideate with, for sure. I think that we're also seeing just a higher number, and I would have to like double check this against the data, but just at a glance, it looks like we're seeing a lot more inbound applications on our website. So I think it goes both ways. Like I think every VC has to do like a much more proactive job of sourcing and finding founders, and like maybe that involves like doing more of creating requests for startups or investment theses, or like coming up with a thesis and then proactively trying to find companies working on those things. But I think the founders are also trying like more proactively to find funding opportunities, and so I think a lot more of them are coming direct to the website.
Absolutely. I'm interested to see how this next year unfolds. Whether there's a Zoom, there's just a permanent Zoom where everybody just hangs, all the founders hang out, right?
Yeah, I mean, I think there's a lot of opportunities to create. It's very TBD right now what's going to happen with school, but I think there's definitely opportunities for more collaboration online. I think there's a big moment for ed tech happening, because the online learning, I think, has to get a lot better if most of school is going to be online. So I think there's a lot of problems to be solved, which is good for founders.
Absolutely. For you in particular, I know you're moving from dorm room and you're going to another firm next. Can you share a little bit about your focus area? I know you dive deep into cryptocurrencies before, but where are you diving into next, and where do you want what types of startups and founders do you want to come your way?
Yeah, so I definitely spent a lot of time on different subject matter. So at Barclays, I covered consumer internet, so the large Web2 platforms like Facebook and Amazon and Netflix. And then I moved over to telecom infrastructure. And so I kind of got into blockchain because I looked at internet as like social networks, telco as like physical communication networks, and then blockchain as like distributed networks. I thought that was really interesting. And then what I really liked about it though was I just thought it was fascinating to think about emerging technologies and how do you create new markets and how do you build ecosystems around something so that all the parts are in place for a mainstream user who doesn't understand what's happening on the back end can just use it seamlessly. And so there were kind of two things that I thought were important when I was looking for a fund to go with. And one was that I really did like that focus on kind of more emerging or frontier tech. And the second thing was I really wanted to work on something that I thought, for lack of a better term, would matter to the world, or that would be important 10 years from now. I've always kind of had like a side track where I've done a lot of like social impact focused things. And so I wanted to be investing in things that maybe it wasn't impact investing, but that I thought would have a big impact.
And is there any area, I know for us at RBL1, we focus on our, zero goals, and zero inequality, and there are sub areas that are secondary, such as, zero disease, zero pollution, in the mix of what we focus on that. Are there any particular areas that you are specifically focused on within the impact space?
So I would say within impact and things I've been involved with, a lot of it has to do with like access to inequality and education, basically. I think I'll be joining a deep tech fund in Palo Alto in a few weeks. And I think I'm kind of exploring like what specific area I want to focus on, kind of bridging the two, where I think there are some venture opportunities, but it's also an area where I've done impact work. I think digital identity is really, really fascinating. So I've started to look at that. Before I was working on projects and research that were kind of more impact, financial inclusion focused. And now I'm starting to look at, okay, like what are some of the big investable opportunities here?
And when you say digital identity, can you say more about that?
Yeah, I talk about it forever, probably. I mean, there's basically like two components of identity, and one is like credentials. So that's basically like government issued forms of ID that you need to authenticate yourself. And then there are what I call more like characteristics, and that's more related to like your online behavior or characteristics that you give yourself. So it could be like your email address and basically any data footprint that you leave online. And so it's super broad what it encapsulates, but I don't think our digital identities right now are like efficient or effective. So for example, like this system online where I have to sign in with a different account on every site, and I have a username and a password, and I either have 37 passwords and I can't remember them, or I use the same one for every account, which is security problems. So you have a bunch of like data security issues and hacks on the enterprise side. And then from the user side, you have identity theft. And so these are very large problems with big circumstances. And so I think it's really interesting to think about what some of those solutions could be. And there's a whole identity stack, and so you can invest at different layers, but they tend to be, most of them I think tend to be kind of on either the authentication side, like how do you in a digital way prove that you are who you say you are, and then kind of at the opposite end of the stack on the security side.
Are you looking into, and I imagine you are from your experience in the digital currencies and the crypto space, in identification in decentralized for decentralized applications? Can you share more of a little bit about that and what you're seeing?
Yeah, so like a decentralized identity or an digital identity system that would leverage blockchain technologies, commonly referred to as like self-sovereign identity. And the benefits of that is that all of the data and permissioning and stuff remains with the user. So you don't have like this basically honeypot database at like an Equifax or something that can be hacked and then everybody's information is out. What becomes challenging with that is that it can be, is not always, but that can be like onerous on the user. So identity in a way is similar to privacy, which I've also looked into a lot, in that the user generally doesn't want to pay for it. They don't want to think about it. I don't know that ownership of data or identity resonates with users, but if you can make it more convenient for them, that seems to be the value proposition that works. So I think self-sovereign identity can be more challenging in that way. And then the way that it's developing now is that it's very fragmented, where you have people building systems for fintech or building a system for Estonia, but it doesn't talk to the system that's in a different country. So the level of social coordination that's needed to get a decentralized identity system where you don't have basically that can be universal or interoperable, or where authentication in one silo is credible in another silo. It takes that's kind of where you need these large or international organizations like the UN or is working on it, or the World Economic Forum, or there's an organization called ID 2020. They're actually working on like, if we're going to have, let's call it digital health credentials, but you call it immunity certificate, but we don't understand immunity, so that's problematic. But for the general concept, how do you create that in a way that can be global and interoperable and done in a way that preserves privacy? And so they've set out standards, and basically like the way to do that is to use kind of more of a self-sovereign model. But it gets very complicated to get the whole world to agree to the standards and frameworks and accept, one country accept another country's health certificates. Very complicated socially.
Yeah, I find it amazing, and it's amazing in the cryptocurrency space that they're working on some of these tough problems, and we just I think everyone assumes that carrying a piece of paper, right, a paper book is the best form of identification, or passports, right, and little laminated cards.
Yeah.
I think there's a lot of potential to make make more secure methods of identification. Of course, wanted to dive in. Can you share a little bit more of what do you see in terms of, you focused on the student innovation space. We're entering this or we've entered this global pandemic. What do you see for the future of innovation coming from institutions, and what excites you and what concerns you as we move forward?
Yeah, that's a great question. So I think central bank digital currencies is something that we'll probably see sooner rather than later. The PBOC right now is already trialing the DCEP in, I think, 4 regions in China. But I think
what's the DCEP? Share with us.
I think it stands for Digital Currency Electronic Payment, but it's basically the Central Bank of China's version of their digital currency. And I think we've seen with like all the challenges related to distributing stimulus checks or the PPP loans or what forms of payment it was, that is putting a digital way to do that, or digital currency, on the top of mind of a lot of different nations right now. So I think that's was already important and kind of being accelerated by the launch of things like Libra, but I think now it's probably closer to the top of the list. So that's one thing. And then digital identity is part of that too. There was a bunch of fraud that was going on. And there were a lot of services where in order to be authenticated, it had to be in person. And it's like 2020, we just can't be reliant on doing it that way anymore. To your point about having this like physical artifact that we carry around like a relic from the past, it's crazy. So that's one thing. I think the other thing is like, I'm seeing a lot of companies talking about and working on shortening supply chains so that we're not overly reliant on supply chains that are long or that are based in other countries. So that can be anything from like food waste, where it's just more efficient and better for the environment and everything to have it shorter, to I've also seen like screen to machine, so incorporating like and it is something that's an AR on your device, and then but having it manufactured like locally to you. So that's one thing that I think will be a bigger focus. I also think the concept, it's John Palmer's concept, not mine, of spatial software is fascinating, because I think one thing that I feel very acutely during COVID is like you can put people in a like a group chat, or there's obviously different social networks that are focused on community, or you can kind of replicate some aspects of that. But I think what's really lost is this whole time I keep saying like my life feels very two-dimensional right now. And so spatial software is the concept that you have software applications that are reoriented around space as it would be in the real world, as opposed to something more like chronology or recency or popularity. So I think that is something, the longer that we stay in this socially distant world, will I think people will be craving that to kind of restore, like everybody talks about right now, like the sense of time is bizarre. Like time's either passing really slowly or really fastly. Like people don't really know what day it is. So I think spatial software helps restore the connection between time and place again. So I think that's really fascinating. The concerns that I think there's a lot of concerns about how education is going to happen if it's online, and so I think there's a lot of opportunity in ed tech right now to create better tools and ways to collaborate, and hopefully to get some of the like social learning that happens in-person school environments. And then I think there's privacy concerns as you just have more surveillance and digital tracking and tracing. I think it's important to control the pandemic and respond appropriately, but I think we need to be careful that we don't implement systems and applications now that become very problematic later in terms of privacy and human rights violations.
No, that's a great list, and really interested in, and thank you for leaving that with. I think we've taken a good chunk of your time. Thank you for sharing a little bit more on what the future holds and some of the areas you think are most promising. So thank you all for watching. This is RBL1, Justine Humenansky, outgoing managing partner at the Dorm Room Fund. Thanks again. And for all those out there, join us on Tuesdays and Thursdays, 7 p.m. Eastern Time, to hear from more amazing investors and founders sharing knowledge about how to break into the space and shaking it up. So thank you, Justine.
Thank you.